evening, everyone. Welcome to our Payday Super webinar. I'm Associate Professor Julian Reid, I'm the Vice President of the AMA, and tonight we're joined by our colleagues from Cutcher & Neal to give us a briefing about the Payday Super arrangements that will come into force on the 1st of July. I suppose, to explain a little bit of the background to this, although I'm sure many of you are familiar, that this has been several years in the making, and the government has been concerned about reforming the retirement system to make sure that payment of wages and the superannuation guarantee levy coincide. And I think that the rationale for that has been that there has been some concern that about delay in payments for certain employees. In fact, I've seen estimates that 6.25 billion in unpaid super has been, recorded as being, delayed and therefore not necessarily being paid on time. So the new regime will mandate funds to be received within 7 days, and we'll hear a little bit more about that. But before I begin the meeting, I should acknowledge the traditional owners of the lands upon which we're meeting tonight. In my case, that's the Wurundjeri people of the Kulin Nation. And I'd like to pay my respects to elders past and present and emerging, and also welcome any Aboriginal and Torres Strait Islander people who are joining us on the webinar tonight. I'd also like to specifically welcome our two guests, Matthew Edmonds and Jodie Walsh from Cutcher & Neal, who will be providing us with a presentation this evening. We will also be following that with a Q&A session afterwards. Now, you can use the Q&A function in the Teams app, and we'll obviously note that as we go along, but we'll actually handle all the questions and respond to those at the end. Obviously, please input all the Q&As you have as we go along into that area, and we'll come back to you in due course. Now, just to further introduce our team, Jo Walsh is a partner at Cutcher & Neal. She's got 20 years of experience in this space, and she began her career as a trainee and was the firm's first female partner. So that's quite an accolade, Jodie. So great to have you with us this evening. And Matthew Edmonds is a partner also at Cutcher & Neal. He's got over 20 years experience as well. His particular expertise is advising small business owners, and his background's been shaped by also some family entrepreneurial ventures. And so he brings a very practical insight and a trusted relationship-driven approach to his work. And we very much look forward to their presentations this evening. So I'll pass over to the two of you, and we look forward to hearing more on this topic. Thanks, both.
Beautiful.
Thanks, Julian.
Thank you. And so Matt and I are very excited to be here speaking with you this evening on what probably isn't the most exciting topic, but we're going to do our best to walk through it tonight with you in a way that is practical and logical, so that at the end of our session you do feel well informed, well supported about what these changes are. The big thing about Payday Super is it is the biggest shake-up that superannuation has had in terms of employer relationships since 1992, when super guarantee was first introduced. And so if we think back a few decades, back then it was all about putting between 2 and 3% of a wage into superannuation for somebody ready for retirement, and things have clearly shifted and changed over the time. So as Julian alluded to, the main motivator from the government's perspective in introducing Payday Super is because there's many, many billions of dollars that they feel that Australian workers have not been receiving either at all or on time. And so I guess within our practices, we always are very well aware that our staff are our biggest assets, and we always want to be doing the right thing by them in terms of taking care of their remuneration, which includes the superannuation going through. So understanding that this is critical for you as a business, but also from a legislative point of view and from the ATO's eyes being on all of our businesses, they will be able to see when we are doing the right thing and the wrong thing. And so we'll walk through tonight how that plays out. One of the big things to note is with this change, it is significant. And so if we use some numbers as an example, in the 25-26 year, there's about $200 million contributions that are currently going through with 1 million rejections. They're predicting that that number is going to change to being 500 million contributions that are being processed through, and they're, you know, an unknown volume of rejections that they're working with. So all of the different superannuation clearinghouse providers, all the different software providers, they have been working for a long time trying to get this ready. And yes, our job is to talk you through how that plays out for you practically, and we'll have, yes, Julian said, some Q&A at the end. So, oh, hang on, we've already got our first IT glitch. How did you make this? There we go. Gillian already spoke so kindly about Matt and myself. For us, Cutcher and Neil, we have a very strong connection to the Medico community. And so, yes, very happy to be working with AMA Federal today, presenting to you. Practically, Matt and I are in Newcastle tonight. Our offices run down the East Coast between Brisbane, Newcastle, Sydney and Melbourne. But we're really happy to work with clients all around the country. In terms of what we'll cover off on today as an agenda, the first part is what is Payday Super, and understanding that. We need to know how the contributions are being allocated. We also need to walk through what happens in terms of onboarding new staff, because there are some changes happening there. There are a few other changes that we will also step our ways through. A big part that we'll revisit at the start and then throughout the presentation is making sure that you do understand your payroll process. You understand the duties and responsibilities, and you feel really confident in who's doing who and when. Cash flow impact, because we can't ignore the fact that this change is a major shake-up as to the timing of when businesses are having to make those payments through. We will talk about the changes and how they sit in the program of Xero. We understand not everybody will use Xero, but it is the main dominator in the industry, the leader. So we're working through some practical examples for you in that, and then we'll finish off with some questions.
Okay, so yeah, as Jody alluded to, we really want to do a bit of a deep dive into your payroll process. And before I get stuck into the rules, I thought I'd just bring up this slide to just have you think about this process whilst I go through each of the individual rules. So I'd like you to keep that in the back of your mind, and then we'll delve into that in a little bit as well. So what is Payday Super? So from the 1st of July, Super Guarantee is going to be calculated as 12% of qualifying earnings. And this is a new term, so I'll go through what that actually means in a minute. And then the other part of Payday Super is that the superannuation is required to be paid to the employee's super fund within 7 business days of paying the employees. Now, there are some limited extensions that do apply, and we'll run through those as well. But the key point to note here is the 7 business days is not the day it leaves your bank account. It's actually the day that it needs to go all the way through the clearinghouse and then be allocated by the super fund to the employee's account. So you really need to pay the superannuation for your employees at the same time, just to make sure you're going to hit that 7 business day requirement. Now, qualifying earnings, it's a bit of an expanded definition. It includes what Super's already calculated on, which is ordinary time earnings, but it's also been expanded to include all commissions, irrespective of when they're paid, directors' fees, payments to contractors that are deemed employees under super rules, and then salary sacrifice super payments are also included. Similar to the current rules, overtime is not included, and other items such as expense reimbursements, paid parental leave, redundancies, leave on termination, and fringe benefits are not included. So my little action item there is employers really need to review your payroll settings, review your payroll processing system, and make sure Super's applying to the correct payments from 1 July. Now, the due date, so generally, as I've said, the due date for contributions, it needs to be able to be allocated to the employee's account within 7 business days. And the exceptions we've got there are for new employees or current employees that are changing super funds, it's extended out to 20 business days. So that gives you a bit of extra time. Out of cycle payments, so if you're making a back pay or a bonus payment, that would be an example of an out of cycle payment. These are due 7 business days from the next normal pay cycle. So again, you get a little bit of extra time there. Exceptional circumstances, so this would actually be determined by the ATO, and it would include floods and fires and those sort of natural disaster type things. That's extended out to 20 business days as well. And then errors. So if you've got an error where the employee made the error, so they've entered the wrong super details into the clearinghouse, the due date actually still remains 7 business days. Whereas if it's an employee's error, so if they've changed super funds and they haven't told you, then it extends out to 20 business days. The other thing to note there is the business days actually obviously excludes weekends, but also excludes any public holidays in any state of Australia. So if you've got employees that are only in New South Wales and you only operate in New South Wales, but there's a public holiday in Western Australia, you actually get that public holiday as an extra day. So that's something to keep in mind. Now, just because there's going to be so many more contributions coming to employees' super accounts, the ATO have outlined these contribution ordering rules. And I think the best way to go through that is just a simple example here. So in my example, I've got an employee that's getting paid qualifying earnings of $1,000 a week starting on the 1st of July. So that results in super payable of $120. And you can see the first payment was due on the 10th of July and the employer made that payment. But if we come to the second payment there, it was due on the 17th and the employers missed that. And then they continued to pay subsequent payments on time. But what the contribution ordering rules apply, they can actually result in a domino effect of late payments. So you can see the payment that was due on the 17th is actually satisfied by the payment that was made on the 24th. And then every payment after that is now late. So this really, I guess, shows that employers need to be really across their processes and systems and checking those to make sure that they're not, continuing to make late payments. And then all of these payments could potentially be subject to penalties. Now, if we think about this with the June quarter superannuation, so the June quarter is actually subject to the current super guarantee rules, and that is due to be paid on the 28th of July. But if we think about if we don't make that payment by the 28th of July and then we start to pay payments under Payday Super, the Payday Super payments will actually be applied against the liability for the June quarter. So what we're saying to our clients there is think about considering paying that June quarter superannuation before 30 June. You get a tax deduction for it this year, or at least before the first payday in July. So you're not getting caught out in terms of the payments being allocated to the wrong amount.
And that's one of the main worries we do have is that practices, we all know this is changing from the 1st of July, but not realising that if you're paying things quarterly at the moment, that you could accidentally fall into the trap from the very start of being out and not even meaning to be. You could be thinking you're doing all the right things and you run your first weekly pay run, for instance, and make the payment in July after 1 week. But the way that the ATO is going to accept the data, you are going to be caught by that June quarter. So making sure, actively thinking about it and managing the cash flow and not being one of those people that's going to get caught out.
So we'll look at onboarding of new staff now, which is a really important step in terms of making sure you're meeting your Payday Super requirements. So when you're onboarding a new staff member, there's a number of things that you need to look at, and that includes providing them with a choice of super fund, completing a tax file number declaration, and then there's 2 new concepts that they've introduced, which is called a member verification registration and also a member registration request. So I'll run through what those 2 mean in a minute, but just touching on super choice. So there actually hasn't been any changes to the super choice rules. So under super choice, employers are required to provide a choice of super fund to their employees. Now, if the employee chooses not to choose their own super fund, then the employer needs to check whether they've got a stapled fund. And if they don't have a stapled fund and they haven't made a choice, then the employee is to use the employer's default fund. So it's important that employers know how to basically check the employee's stapled fund. So what you can actually do is make a request to the ATO via their online services to see if an employee has a stapled fund. And that's really just to make sure that you're avoiding any super choice penalties. Where an individual has only one super fund, that'll be their stapled fund. And then the ATO has some tiebreaker rules if you've got multiple funds. So it usually come back to, the fund with the biggest amount or which ones received the most recent contribution.
One of the things we hear a lot with that is that, you know, employers go, God, like I've asked the question and my staff member, why is the responsibility not on them? Whether or not you agree with who's responsible, unfortunately, the ATO's view is it's up to you as the employer. So still having to go through all those steps, even though they seem superfluous sometimes, making sure you are dotting your I's and crossing your T's and not getting caught out in terms of that correct choice of a fund.
Yeah. Yeah, and you'll see that online, let's say the payroll systems will actually start to help streamline this for you as well, which we'll run through in Xero shortly. So as I was saying, with onboarding of new staff, so the due date is extended to 20 business days. So you do have some extra time, which is great. Now, the member verification request, this is a new system that they're bringing into play where an employer, through their payroll processing system, can make a request to a superannuation fund to confirm whether that fund's able to receive contributions for an employee. And the idea of this is to try and limit those errors and bounce backs of initial payments. So the other one there is a member registration request, and that would be used for an employee to be set up as a super member of a default fund. So both of these are actually being rolled out by payroll software providers and super funds at the moment. So you'll see these gradually. I don't expect all of them will be ready to go before 1 July, but they will start to be used a bit more widespread. And the idea of that is to try and minimise those errors. Now, what happens if an amount is paid late? So if it's paid late, it's subject to superannuation guarantee charge. Now, the first three components of super guarantee charge, they're all going to be deductible for income tax purposes, which is a win for employers. Previously, super paid late was not deductible. So going forward, these amounts will be deductible for income tax purposes. So the first three components are obviously the super that's outstanding. That stays as defined as being qualifying earnings. It's not expanded to bring into overtime, which it is under the current rules. So that's another win for employers. The second component is notional earnings, and that's an amount that's a compounded interest rate effectively on the outstanding balance, and that's meant to compensate the employees for the lost earnings. And that's currently at the general interest charge rate, which is 10.96%. Now, the kicker is really the administrative uplift, and that can be up to 60% of the shortfall, and that's applied at the ATO's discretion. If the amounts remain outstanding after the guarantee charge is issued, then there's additional interest and penalties that can be imposed by the ATO, and they're not going to be tax deductible. So just looking at a little example here, we've got under the current rules, we've got an amount of super guarantee outstanding for 20 days, and it's $1,200. So under the current rules, that increases to a payable of $1,226. But under the new rules, under the Payday Super rules, that increases up to $1,927. So the biggest difference you can see there is the admin charge. So that would apply to every payment that's made late. So you can see here, this is where if you're late regularly, your payments can really compound.
What you may see and it would probably not be your every standard employee, but and that's because of the volume of the wage that has to be around this. But essentially, if I was somebody who was on a salary of $270,000, and that figure at 12% would see me reach my cap, my concessional cap that I have as an individual of the $32,500. And that's the number moving forward into the 27 financial year. So if you've got somebody who's on a salary of more than $270,000 and you were just letting the system calculate 12%, you will end up putting away for them more than what is this maximum contribution base. So you'd get them to more than their balance. So the way currently that we have the rules is that the per quarter, there's a figure of $62,500 and that then resets every quarter. From 1 July. They're just looking at it on I think it's a more practical basis in many ways. And essentially there's a timeline throughout the year. And once you get to your cap and the employee has received all the contributions to hit them to their 32,500, then you essentially cease paying super guarantee on the balance of their wages. So if you had someone on $600,000, for instance, they're going to be done with their cap by December. And I think we've got our next slide that talks it through in that bit of a timeline. So yes, you can see that's an example of $400,000, which at $400K a year, you are receiving monthly salaries of $33,000. And so currently, if we work through July, August, September, it's going the 12% and then 12%, but hey, I've hit my cap for the quarter, then I'm not paying anything. And then that repeats itself throughout the year. And you can see it's quite staggered from a cash flow point of view of me as the employer. All of a sudden I'm having, high amount, nothing, high amount, nothing. That's not really easy from cash flow and from the superannuation funds point of view. It's quite staggered. The new way that we're looking at the maximum contributions base is essentially you do that 12%. So 12% of 33,333 is $4,000. They will do 4,000 every month until I get to February. And that's it. I've reached my cap and that's enough that's contributed. So it smooths it during that time. However, you're then left with a different lag at the end. From an employee's perspective, they might really enjoy that because it means that their full balance is sitting in their superannuation fund earlier. So it's starting to earn those investment returns for them as an employee. For an employer, we just need to be aware that, yes, anybody who's basically over $270,000, which may not be your third-party staff members, but you may have yourself structured in a way that you're paying practitioners that way, or yourself as an owner. So yes, something to keep an eye on. And yes, our action point here is to make sure that you're looking at your payroll system. If you've got people who are going to fall into this category, check into the back end of your payroll system and make sure that it is now calculating correctly.
Yeah, because you're going to bring forward some of those payments. So if you don't, then you might miss those payments. So it's important.
Yeah. In terms of the we use clearinghouses. That's what the way you need to put your contributions through to super funds. And the ATO, the federal government, had a small business superannuation clearinghouse. That was that brand, that actual version. That will actually cease to exist and be closed from the 1st of July 26. So they did stop accepting new registrations a while back in October 25, and we're hopeful that there's been enough word out there about this that people should have already been transitioning themselves as an employer. If you were using the small business clearing account, you should have been transitioning to something new. If you haven't yet, we would say do that ASAP, put that on the to-do list sooner rather than later. But they're saying that basically anything that gets in before 30 June, that they can commit to processing, but you're going to have a problem if you're then trying to push things in July. And just anything at the end of the financial year, so much, I guess there's so much traffic through all things that are superannuation and transaction based. Don't leave it to the last minute and find yourself caught out. It is a big change, and the government recognises that. And as you can see on the examples that Matt worked through, those penalties aren't small. A 60% penalty is huge. And when you're talking about anybody in the healthcare industry and, profits are already maybe tight, we don't want people to be burdened by these penalties. And the ATO is making some allowances. So they are saying, look, in their first year of a new system, they are going to take a slightly altered compliance approach, but we still obviously want everyone to do best practice and then be following what they can. So essentially they're traffic lighting it into the green being low risk, amber being a medium risk, and then red being high. Examples of low risk would be something where it's happened and we're quickly resolving it. Everybody's trying to do the right thing. It was just a genuine accident. A medium risk might be that amounts were paid within 28 days of the end of the quarter. So again, still trying to do the right thing, get the money away for the employee. I just didn't quite get it in the right time. Whereas high risk is, you actually haven't made it even, a good shot at it. And they're going to say, no, that's the high risk. And that's where the penalties then will be scaled with that discretion that the commissioner has. Yeah,
that's right. That's really where they're going to focus is penalties and things. And that's where you'll be looking at that 60% uplift.
Yeah. And we like to think that the people who are already doing the right thing, we're all going to be tried to continue doing the right thing. It's just going to take a new approach and make sure we're finessing our processes, and the ATO will target the people who are truly doing the wrong things.
Okay, so now what we're going to do is have a nice deep dive into a payroll process. So what we'll do here is break down this payroll process into sort of 5 key parts and look at the questions you should really be asking yourself and the things you should be thinking about to make sure that your payroll process is ready for Payday Super. So the first part we'll look at is that system configuration and data maintenance. And a lot of this will be managed via your payroll system. So whether it's Xero or Employment Hero or any of those others on the market, this is where these systems can be really helpful. So looking at the onboarding of new staff and then maintaining your database of employees' details and rates and entitlements. I've got their point around making sure employees are advising you of changes. That's really important to make sure that they're telling you when they're changing their super fund. Using that electronic onboarding where possible. So a lot of the systems now are being updated to electronically onboard staff where they're entering the data and you're not having to data entry things which might be subject to errors. Always making sure you're complying with the super choice rules. So again, a lot of these online systems and new cloud-based software systems are actually doing this for you. So that's a good way to make sure you're not doing manual processes, using those systems for you. And then my last point there is just around making sure you're ready for the first contribution to new employees. So when this member verification request comes through, then using that system as well to help stop any of those errors that happen. Now, the next part of the process is really actually processing the payroll and then having it approved prior to a pay event being triggered. So this is really just around system configuration. So looking at making sure all of your components of the payroll are being calculated correctly. So gross wages, PAYG withholding and superannuation. And then you're asking yourself there, have I updated my system for the changes to qualifying earnings? Have I updated the system to make sure I've taken into account the changes to that maximum contribution base? And then the key point here is around who is your payroll approver? So if you've got someone that needs to approve the payroll, what if that approver is not available? So have you got a backup person? Thinking about those sort of things to make sure that you can have that payroll process moving smoothly. Now we come to a pay event. So once it's been triggered, our clock is ticking. So we've effectively got 7 business days to get the amount to the employee's account. So once the pay event's triggered, we need to obviously pay the employees. We need to lodge single touch payroll reporting, and we need to get that super amount to the clearinghouse. So then it's got enough time to get to the employee's account. So again, ask yourself who is the approver of the super payment, and what if that approver isn't available? Who is the backup? So we'll touch on how Xero is dealing with that in the future, but they're important things to make sure you're across. And then obviously just a reminder there, we need to stop using the small business clearinghouse. So once Payday Super comes into effect, we're not able to use that clearinghouse. And then we move on to the clearinghouse processing. So this will be where any errors in the super payments are being picked up by the clearinghouse before it goes to the super fund. Again, the clock's ticking here. We're within this 7-day period, and you should be asking yourself, is the approver available to reprocess that and approve that payment coming out of your bank account again? And also checking your system. So how long does your payroll system take to show the errors coming through? Because that's important. And how you're getting alerted on those errors. So making sure you're clear on who's checking that and making sure that you're actioning those nice and quickly. And then why did that error occur? So if it's the employer's error, our time is still 7 days. But if it's the employee's error, we get a bit more time. So we get it extended out to 20 business days. And then finally, we're wrapping everything up. So we've got our payments have gone all the way through, no issues with the clearinghouse. We can close off the payroll and just file everything and be done for the process.
For small business, we're well aware that cash flow is key to everything we do, and definitely the switch in this may have some significant cash flow impacts for some practices. So the people who are going to feel it the most are those who are currently paying superannuation on a quarterly basis because they're used to everything happening in that 3-month lag. So the example we have here is, let's say that our gross wages were $100,000 a month and we were making those super payments quarterly. The cash flow impact is essentially $36,000. And the way that that's calculated is the blue line that staggers kind of as steps that work their way up a ladder. That's under the current system where you make your payments every 3 months, whereas the red exponential, not curve, straight line, is that steady increase of making the payments for every payday. So the difference being, in this example, that under current rules, the practice has $36,000 for 3 months longer. Under the new rules of Payday Super, it's just going to be that constant slide and increase then in payments happening on a regular basis. It's not the end of the world. You're not $36,000 worse off, but it is critical of understanding the timeline because you're going to need that money essentially 3 months earlier.
Yeah.
If we all need to make sure we have our super contributions for the June quarter paid before the first Payday Super, your first pay run comes in July, then yes, it is pulling forward. Instead of it being on the 28th of July, we're pulling it forward to having to have it made by the 30th of June. In terms of cash flow tips, so yes, cash is king, and it's what keeps the business churning through. The ideas, if you were looking to make some small finesses, might be looking at what your patient payment terms are and how long you're then allowing your patients to pay you, given that we now need to be sending out our super on a far more regular basis. Thinking about things of how frequently you invoice. So if you're a practice who charges service fees to your practitioners, that may be currently sitting at, charging them at the end of every month, and so a service fee per month. It may be deciding that I actually need to call that money in and earlier and charging my service fees fortnightly, because now you as the employer have an obligation to pay on your staff on a more regular basis. Things like what payment methods are being used, how long is the money taking to get from when the patient pays to when the money hits your bank account, making sure you're all over your data collection processes. It's something that we like to think that you review on a regular basis and don't let debtors get out of control, because you know that the longer somebody owes you, the less likely they are to be able to pay you. Understanding, of course, there are various organisations that you will be working with who don't pay on a timely basis, and you do have to put a bit more effort and energies into harassing them, but doing what we can in a debtor's situation. If you want to stretch out, or if we can try to negotiate with your suppliers to stretch out your payment terms. Another thing is just sometimes when an invoice comes in, you don't necessarily have to pay it on that day. You could wait until the due date of the invoice, and that wouldn't cause any problems with your suppliers or expenses side of things. And yes, mostly it's just being prepared. So without good information, you can't make good informed decisions. And so making sure something like a cash flow forecast in terms of financial reporting is something that you are actively doing in the practice.
Yep. So what I'll have a run through now is the software system Xero specifically. So it has a integrated payroll system within its ledger as well, and it also has a super clearinghouse that utilises within the Xero functionality as well. So we thought this would be a good example, and I would say it's the market leader in small businesses for accounting software packages as a one-stop shop. So we thought it's a good example of one that we could run through. So in terms of Xero, what we want to do with Xero is really make sure that we're utilising all the functionality to streamline and automate as much as we possibly can. So if you're doing anything manually, then you should think about how Xero can make it do it better for you. So using timesheets, using the employee portals, emailing your pay slips, doing batch payments via the ABA file exporting, getting the employee onboarding. So that's a new feature which we'll run through shortly. And then also using other add-ons to make sure that you're rostering and clocking on and off and those sorts of things as well. So these are the functions that are actually available in Xero now. So we can actually start processing payroll under Payday Super in Xero right now. So things like that electronic onboarding of new employees, We're able to pay super directly from the pay run screen in Xero. And then we've also got Xero's now implemented like a refresh auto super screens, which will run through. And then qualifying earnings, they've changed their systems and processes. So qualifying earnings is now referred to. So we're ready to go from 1 July. So this is just an example of what the new employee onboarding system looks like. So you can see here, we've got the demo company open. And if we go into the employee section and we're starting to work on a new employee, we can actually invite the employee to self-onboard. And this is a really great feature in terms of putting the onus back on the employee to make sure that they're ready to go and they're entering all that data themselves. So then we don't have to actually do that double processing of entering it for them. So when we send through this employee onboarding, the employee will be required to enter all of their personal details and tax information, as well as super and bank details. So that'll effectively get that information into the system, and some of that will actually also satisfy the requirements we'll need for the super choice and things as well. Now, the platform that Xero uses is called Auto Super, and that's their clearinghouse. So to have Auto Super set up in your Xero file, you need to have the payroll subscription set up and also having a bank account added to the dashboard. So we need to have our bank feeds connected as well. And then we need to register for Auto Super. We obviously need to have the super details entered in for each employee. And then if we're transferring over from, if you were previously using the Small Business Clearinghouse and you're now going to start using Auto Super going forward, just need to make sure that any payments that were made through the clearinghouse are marked as paid before we start making payments in Auto Super, because obviously we don't want to duplicate those. Now, this is a function, if you do use Xero, you may have noticed this. This is a function where when we're processing payroll and making payments for our employees and calculating all of our wages and lodging everything with the ATO for STP reporting, there's actually a functionality now where we can select pay our superannuation. So I guess Xero is actually kind of streamlining things on their side as well, trying to make it as easy as possible for employees to make their super payments. So without having to go into a different screen at all, we can actually hit go and pay our super payments straight away. They've also refreshed, this is a bit of a sneak peek and it hasn't been available yet, but they've refreshed their Auto Super screen. And really the key to this is just highlighting anything that needs attention. So they've kind of color-coded things where anything that's outstanding or is late or based on their calculations, needs to be dealt with, then it's really highlighted red to make it super clear that you need to action it. So it's just, I guess, part of Xero just trying to help employers make sure that they're meeting their requirements and flagging anything that's not working. And then that way you can then go back and check any errors and things as well. They've also updated their payroll settings for qualifying earnings, so the definition of qualifying earnings, and this is really just to make sure that the items are being reported correctly for STP reporting. So you should see now each item can be selected for it to be qualifying earnings going forward. Xero have advised us that they've actually gone through in the back end and from what they determine as being subject to qualifying earnings, they have actually already selected that. So we're saying to clients, you really need to go into the back end of Xero and check this to make sure it's right, because Xero are a software provider. They are not an accountant or a tax agent or anything like that. So you should really be making sure that this is checked before you rely on that before 1 July and Payday Super comes into play.
And we know that so many businesses set up different pay items with different words that suit how their business operates or how they pay people. But it does, obviously Xero couldn't just make a broad stroke for assumptions and get that right every time. So definitely looking into what your pay item is and should that have that ticked. It's critical to do pre the 1st of July.
Yeah. And as I said, these would be the same sort of items that you need to check off whatever payroll system you're using, just to make sure that you are compliant going forward. Now, multiple authorisers. So at the moment, when you're authorising a super batch in Auto Super, in Xero, then there's actually only one person that's able to be an authoriser of that payment. Xero has had a lot of feedback around having multiple authorisers or alternate authorisers. So that's something that they've promised and promised and promised, and they're saying that it's coming as soon as they possibly can. So something to look out for, and it kind of speaks back to my slide earlier on the approval process. So at the moment, you really need to have a backup. If you don't, then that approval person, if they're expected to be away, we need to actually change who that person is before they're unavailable to be able to get that payment done on time. And then this is an example of the timeline for batch processing using Xero's Auto Super. So they've just outlined their expectation and what you should be able to see in the Auto Super batch payment screens in Xero. So they're saying under this example, we've got a payment that's made on the Wednesday. They're saying by the following Tuesday, which is effectively business day 4, that amount will be showing as paid. So that's the amount that it's really left their clearinghouse, and then it's then to be dealt with by the superannuation fund and allocated to the account. So I think it's, I guess it's key just to keep in mind that day 4 might be the day that you get an error coming back, and then that means that you've got to really quickly reprocess that amount to make sure it's got enough time to get to the employee's account by that day 7. And so then what else is coming through? So as I've touched on, there's more super batch screens, and those that will be refreshed for new things coming, as well as that they're doing like a bulk review tool to make sure that the qualifying earnings amounts are correct. The other thing that Xero is bringing into account is this member verification request. So that's not in there yet, but it is coming, and that really will be key to try and help reduce those rejected payments for new employees. And as I touched on, those alternate super batch authorisers is also coming as well. Okay, so now we've got some frequently asked questions. So we've had a lot of clients and payroll processors already quizzing us on things. So we thought we'd chuck in some of our own to start off with. So the first question there is the salary sacrifice to be included when paying super for Payday Super? So the answer to that is yes. So you should be making, so if an employee is salary sacrificing their wages into super, those amounts are required to be paid at the same time as making Payday Super payments. The next question is, can we resend a Xero Super authorization code if it expires? And yes, the answer to that is we can. You just need to go back into and send through another authorization code. So again, it's just really key to make sure that you're across that so they're not expiring, because then they might just cause a delay going through in your processing. And then other options. So other clients we have that are using not Xero, but using other options. So Employment Hero is another software system we see a lot of people using. They have their own clearinghouse built into that system as well. There's Rippling, ADP, which is actually a outsourced payroll provider, and Paycor is another one as well, which we've come across before.
So in terms of why is this being introduced and how is it actually helping employees, it's as Julian alluded to at the start, there is such a phenomenal amount of unpaid or underpaid superannuation. So talking $6 billion of money that employees have essentially worked for and that they deserve, and it hasn't ended up in their superannuation funds. And so from the ATO's perspective, it is a focus of theirs to make sure that working Australians are being paid what they should be being paid. And so bringing this system into something that has more regular payments, more manageable cash flow, more eyes and scrutiny from the ATO's perspective, all of those things, the motivator is to make sure that the staff are getting what they should be paid in their super funds, so that then it can start earning them interest and accruing their wealth in terms of their own wealth planning and that retirement side of things. The question around, are there any exempt employers? No, there are not. Everybody is caught. Whether you are someone who has one employee or you have 100,000 employees, everybody is in and has to follow along with Payday Superannuation. Can employers change their payment frequencies and or the timing of when they're paying wages? That is something people were asking, thinking, look, if I was weekly, and I could push that out to fortnightly, for instance, that then changes your superannuation obligations to also being fortnightly. Yes, you can, but we would say beware of various conditions around that. So one of those is making sure that under the employment award that your staff member might be on, that there isn't a specific timing that that person is meant to be paid. And also going through the process of changing pay frequency is not something to be done lightly, because it does have real life ramifications for your staff members. So if you were looking to do that, you want to make sure you're having that conversation early and that they understand, because from an employee's perspective, they might have direct debits set up. Everybody plans how they spend their money throughout their pay run. And so we don't want to put anybody in an adverse position without adequate notice and communication. And then people saying, all right, well, what is the due date for non-employees? So we've said contractors, you may have locums who are working within the practices. The important thing there is that your due date for contractors is 7 business days from the date that the invoice is actually paid. So not the invoice due date. If you happen to pay it earlier than the due date, well, that's when your 7-day clock counts and it has to be to the super funds. If you happen to pay it after the due date, it's still 7 days from that payment date. So thinking again, the same way we're paying staff and that's our date, when we're paying anybody else, whether that's locums, contractors, things like that, it's the same thing, payment date. Obviously, there are a world of people who use and have self-managed superannuation funds, and so wanting to understand, does this apply to them? Yes, it does. So if your employee has a self-managed fund, yes, the same rules apply as to the timeliness of their payments. The only thing that is different when you're talking about self-managed funds is that if you are a closely held employer, and by that it means your only staff members are essentially your spouse, and you don't have anybody else in there, so you're closely held, then you are allowed to make those super contributions direct to the super fund by direct EFTs or direct debits. You don't need to go via a clearinghouse. So that's the only shift, but that's the method of making payment. It doesn't change the payday super and the timeliness of what you need to pay. Obviously, lots of practices might have some closure times over Christmas and summer. And so if that's you and you do have a time where the office is closed and staff are off and your doctors are away, we still need payroll to happen. And so the same way at the moment that you're managing your wages and whether you're preloading them, whether you jump on in between, whether you do them at the back, however you're doing that, it comes back to, for superannuation, the payment date that you've used for your employees. So you can choose, if you I guess preloaded all of your wages for the month of January, you can also then preload your superannuation if you wanted to, so you could pay it earlier. But yes, it's critical that whenever those payment dates are going, even if the office is closed, the ATO still wants you to be following the same payday super rules.
Yeah, and those contribution ordering rules can effectively, if you've got a prepayment in there, it'll just apply it to each payment as it comes through. So yes, it can be prepaid, and that could be a good way to avoid those potential penalties.
Yep. And then are the clearinghouses, are they actually required to process transactions quicker? Well, not necessarily by law, but all of them are clearly working very hard to make this system seamless, and that they know that the motivation is to get money to where it should go quicker. And so a lot of the clearinghouse providers are implementing same-day payment processing, so they're updating their platforms to keep up with the market demand as well. So we naturally will see it shift to quicker processing of transactions, but yes, it's not necessarily a law, it's just the way that the market's going to move. So I guess as a wrap up from us here, the main things are, we're saying act now. We are in the thick of end of financial year. The next 5 weeks, you'll blink and they'll be gone. It'll be 30 June and 1st of July before we know it. So making actions where necessary, doing it now before you get stuck at the end of the year, that's really critical. Important, review your systems, understand the processes, know who's playing what roles, know where any of your little glitch points might be, monthly and where you might need to make some modifications. Definitely thinking about the cash flow impact in needing to make payments sooner. So not being caught out and unawares, planning proactively and making sure you're armed with good financial data and information to help you make those choices. And then the last point here about team communication and training. So if payroll is not done by you and it's another staff member, making sure that they are very well versed in everything we've talked about today. And that, yes, your staff and your payroll team and bookkeeping and admin, everybody who plays a role needs to know how critical it is to each of these steps being achieved and the timeliness of that. We're really grateful that you spent some of your evening with us here today. If there is anything that you would like to reach out and chat to Matt or myself about, definitely, and we'll go through if there's any Q&As as well. Yep. Just want to make a quick mention. We have been doing a financial literacy program that was initially directed towards women, more so because it came off the back of International Women's Month, but it's our way of just stepping through some really key critical financial information and wealth planning tools that we're doing with our clients and anybody else who's interested in watching their just monthly on-demand webinars. But I think then, Julian, are you happy if we just take a quick look at Q&A?
Sure. Yeah, we've got a question already, but obviously if there's any other questions, obviously participants can submit those in the Q&A section. I have to say, of course, you had a very comprehensive list of questions there already, which probably answered a lot of those. But the first question there is from Jennifer, just about about the owners who do a contribution reserve in June 2026 for the next financial year for the full concessional contribution.
That's a good question, really. So, and they're an employee as well, are they? So
yeah, I think it's an owner who's suggesting that for an employee, yeah.
I would think it would sit there. So
I'd say it'd probably, under the Super Payday, it'd probably sit as a prepayment effectively of those contribution liabilities as they're arising. So if we're processing payroll going forward, I think that's probably how it would work. Yeah.
Okay. Look, I had a question too. I just with respect to record keeping. Am I correct that you have to keep records for 5 years for superannuation? Is that correct? Like the ATO rules?
So it comes down to how you're operating, how you're structured your business. So it's either a 5-year or a 7-year time frame, depending upon if you might be running it through a sole trader or a trust or a company. So it's not necessarily about where the money's going in that it's getting to a superannuation fund. It more sits as to how are you, the employer, structured. And so whether it's, 5 years for individuals and for trusts, and then 7 years for companies.
Yeah.
And I also understand, just as a side, Fair Work requires 7 years records as well. So
yeah,
so
seven
the Health Records Act, 7 years seems to be like the magic number.
7's a safe number.
Yeah, that's the one.
And the ATO, they do recognise that electronic records are as good and valuable as paper. So you do not need to have wads and boxes and storage containers. Everything can be electronically filed and kept. But yes, that 7 year is a safe zone in terms of financial as well as medical records.
Yeah, and probably a particularly important one if you are moving away from that small business clearinghouse is to get that information out of the clearinghouse now, because they're not guaranteeing that is going to be available after the clearinghouse closes. So I think that's really important to make sure that you do get that information.
There was also just a further follow-up there. So if you are the owner and have an SMSF, do you report the full amount on the first payment through, say, Mind Your Own Business for Payday Super after July 1?
I would think so. Payday Super, all it's doing, it's just the terminology around the program. From a payroll point of view, I guess you're saying if you process the first pay run and put the full contribution through.
That's right.
Yeah, you would be able to, we would assume. It's going to be interesting with things like reserving. It already throws a few glitches through the ATO system, and they have been trying to work on understanding how to apply it better. I would think in that instance you would be doing the best efforts to report it, and then if the ATO's data didn't match it correctly, you would be in that green zone of safe, and you've already, the money's there, which is the part the ATO cares most about.
Got the money by the 7 days is the key point. I think that then it's just a matter of them
understanding how to apply that data and match it off.
Yeah, the system kind of catching up to the outliers and those sorts of things, which is not really like a usual way of paying super.
Yeah.
Yeah, sure. The other thing I was just curious about is that, and it's a little bit off topic, but just with respect to superannuation more generally, have you got any advice for us really with respect to how to maximise our contributions and make sure that we put as much as we possibly can into superannuation?
Yeah, I think that's the key point is thinking about the time value of money, and the earlier you can get your contributions in, the longer it has to then continue to grow your wealth. Maximising contributions is always the goal, maximising those deductible contributions. And then in terms of whether you've got the capacity for additional contributions, the non-concessionals, that's something that anytime it comes into super, it does fall under that personal advice space. So wanting to make sure you've got the right advisor that you're speaking to, that you understand clearly what the cash flow ramifications are, because if you're somebody who's in their 20s and they're putting maximum contributions in, knowing that money's locked up for a very long time, and I guess everybody has competing financial goals that happen throughout our lives. But yes, the value of super and the value of that deductible contribution can mean a lot in terms of cash flow and tax management.
Yeah, and I'd also say it's important. There's the unused caps from prior years is something to think about as well. So if you're just starting out and your super balance is less than 500,000, you do have access to the previous 5 years worth of caps that you haven't used. So if your income is starting to really take up and you've got some extra cash and you want to get a deduction, you can actually get one more than the annual cap by using those prior year caps. And that's really important if you are going to start to get around that $500,000 member balance, because once you're over, if you're $1 over that 500,000,
it's all gone.
It's all gone. You can't use it anymore. Yeah. So that's discussions we're often having with clients, is making sure that we're taking advantage of that as we can.
Yes, and I think people obviously earlier in the careers, as you say, when their income starts to escalate, that it's certainly worth considering getting the funds in as early as possible if that's available to you, because obviously they compound over time.
Yeah.
Okay, well, I'm not sure that there's actually any further questions there. It seems as though we've exhausted the questions of the group. So, Jodie and Matthew, thank you very much for your contribution this evening. I'm sure if there are any further questions from any of the participants, we can pass those on to you if people think about them subsequently. But I'd like to thank you very much for your very interesting presentation. It's obviously very, I suppose, incumbent upon us as employers to make sure that we are fully compliant when the new system rolls around at the end of this year, financial year. But I'd also like to thank all the attendees who've joined us this evening and contributed, and including those, of course, who've asked us some questions. And over the next week, the AMA team will reach out and make sure that we get a little bit of feedback about this meeting and whether it's been helpful. Of course, also that there is a question there that we have recorded this, and of course we can obviously make that available as well. So thankfully for those that perhaps haven't had a chance to see this, that they can actually see it at a later time. So thanks once again to you guys from Cutcher & Neal. As always, we appreciate very much the partnership with your company. And thank you to all the attendees as well. And I wish you all a good night. Thanks very much.
Thank you very much.
Thanks, everyone.
Thank you.